Hey, Matt, it's good to see you again. And for those who don't know me, my name is Mark Chalmers. I'm president and CEO of Energy Fuels. Energy Fuels is emerging as the largest critical minerals producer in all of North America, perhaps the world, with our focus being on uranium, number one, rare earth production and processing, number two, and then vanadium production, number three, followed by some recycling. So we're very exciting opportunity for investors, and we're emerging very quickly on this whole, all things critical minerals.
Mr. Chalmers, lovely to see you again. Hope you are well. Thought I'd phone you. You've been busy since we spoke back in June. The first question is, what on earth is going on in the uranium market? Everything's taken a little bit of a nosedive.
Yeah, Matt, I think that people are waiting for the price uranium to start responding in a material way. It's kind of stuck in that $32, $33 per pound. We all know that the price of uranium has to go up substantially more than that, probably north of 50 to really start delivering newly produced uranium at any kind of a margin. I think the market was moved really quickly, and I think the future looks very bright. But I think people want to see the price uranium move accordingly. And so I think that once it starts to move, you'll see equities start to move with it again.
Yeah, it's interesting times. I think we saw another kind of catalyst moment yesterday, which was the SPUT, the Sprott Physical Uranium Trust launched, went live, up 25%. So it got a good reception, but it wasn't enough to get people moving on the junior uranium equities. What's it going to take?
Well, look, I mean, the Sprott Uranium Trust is new, and I think there's some excitement behind that for a lot of reasons, a lot of good reasons. The uraniums, like you said, have been sort of punished in the last couple of weeks, maybe getting a little bit of a lift today. I think that, when you look at, again, this continued focus on reducing carbon emissions, the announcements from TerraPower, that is owned by Bill Gates on the building a small modular reactor in Wyoming, further announcements on additional small modular reactor progress, all bodes well for the future.
Yeah, it'll be interesting to see how the next few weeks play out and see how Sprott play the market for sure and pushing their message into market. Notice that you guys have done a deal. You've done a deal with the ICU, International Consolidated Uranium. Are you giving them your good stuff or are you keeping that for yourself?
Well, we're definitely, transacting some really quality projects to them. And we're excited about this transaction because, I don't think people understand the number of projects that we have that are fully permitted, ready to produce right now. And we only have so much bandwidth and so much time available. So this transaction we find unique. I don't think anybody's done anything like this where we've taken, some of these projects and we've sold them to them. We will continue to manage them. It comes with a milling agreement. This is the only properties that have a milling agreement, and it is a very attractive milling agreement. We'll be their largest shareholder, and I'll be on the board to help advise them on how to, get their people to focus on these projects and advance them while we're doing the rest of our uranium projects and the rare earths.
But are the projects any good?
Yeah, they are good. They're excellent projects. I think, if you looked at it, these projects are probably better than 50% of the other uranium projects that companies have in the United States and probably around the world. They have a proven production history. We know what the costs are. They also include one of the projects called the RIM project. It's one of the highest grade vanadium projects in the entire world. But as I said, we do not have time to focus on these projects. And coming with a milling agreement, these are projects that can go into production in a matter of months, not years, with limited capital investment.
So this is not an also ran, because we see a lot of kind of retread stories, people like dusting stuff off out of the, pulling them out of the bottom drawer, dusting them off and trying to, pump the market for money. You think these projects, these assets that you've done the deal with are good enough to get this company into production? For sure.
Yes, for sure. With an improved uranium market, they will go into production. As I said, they're developed. They require minimum capital. And if you look at their kind of cost structures, fully loaded, including reclamation, they are competitive with other projects, and they're better than most other projects in the world. Okay.
So you've got a tolling agreement with them as well in place. Does that mean you're softening in terms of opening up for other companies tolling their ore through your White Mesa mill?
No, not at this point in time. This is a unique arrangement. This is a unique arrangement because of our ownership in International Consolidated Uranium. This is a unique arrangement, and it is the best toll milling agreement we have ever put out because of our stake in the company. So this is a very unique arrangement. It's basically a pay as they use the facility, and it's very attractive. We need feed to the mill, and this is a way to incentivize feed to the mill while we still have the ability to mill the ores and participate as a shareholder.
So what's the deal look like? Are you incentivized to stay in it, or are you going to be looking to cash out quickly?
We're not planning to cash out quickly. We think there's some real growth opportunities here in an improving market. At close, in cash and shares is probably in the order around $15-16 million of cash or shares, which can become working capital for us. We plan to hold these shares for certainly the foreseeable future. And then with some other payments, it's probably got a sort of a value at current share prices for International Consolidated Uranium, close to $25 million. So, if CUR, shares go up, 3-4 fold, it can be, quite an attractive investment for us as we go forward. But we want mill feed, we want mines to be developed in the region, and we want partnerships like this one to go forward. But we are not opening the door to toll milling agreements to any other party, particularly at this point in time, and maybe not even in the future.
Understood. Very clear. So have you got other products in your portfolio? Because you've said before, it's an extensive portfolio. It's the largest portfolio of uranium, vanadium projects in the US. Can you see more deals like this coming down the line?
Right now we're not planning to divest any more of our uranium assets. The La Salle complex is really a complex of about 5 or 6 mines, underground mines. So that's quite a package of properties on its own. And we've got Sheep Mountain, we've got Roca Honda, we've got Pinyon Plain. So we've got plenty of projects right now.
Okay. Just talking about the way you structured this, because you've not only said tolling, but there's a management fee as well. So you'll be advising them as the best way to approach this.
Yeah, the deal is that we'll continue to manage these properties. We have people in place, both from a overall management perspective and a maintenance perspective, and they'll pay us a fee to do that, and they'll also pay the holding costs. So this is, again, a very unique arrangement, and I think it's really good for both companies. I'm excited about it. I go back a number of years with Phil Williams and know many of the board members in their company, and so we're tickled with the arrangement, and I think it's going to be a real value creation opportunities for both groups. Okay, so
you know them, you rate them, the management team. That's good, but you also control their destiny somewhat, because you've got to agree a tolling fee, which allows them to make margin. You will be charging them fees for the management and advisory as well. So, but you've got to give them enough room to breathe and grow too, don't you? So it's a very fine balance you've got to manage.
Yeah, look, the way it's structured is that there's not any big loadings here that are going to be very costly for them. I mean, for example, the milling agreement, they basically just pay as they use the facility, and I think the markup is around 15%. Well, that's a great deal if you only have to pay a 15% load to use the facility. And it changes over time a bit, but we've made this very attractive for them to produce uranium very quickly and provide feed to the mill.
Okay, got it. So no one should be talking to the market about tolling White Mesa except for these guys. That's what I'm hearing.
Not at this point in time. We are very careful with who we do business with, and this is, as I said, a very unique, exclusive arrangement with them.
Okay, so you are a uranium company. You're not looking to outsource all the uranium components in other deals like this. You're still uranium company number one, first and foremost, and then rare earths. Is that right?
Correct.
Okay, so that's the business going forward. Fine. So let's talk about, if we don't mind, let's talk about rare earths, because you've got a partner in the shape of Neo. I know you've had them over with you, working with you, and sort of planning. How do you get to the point where you can actually, it's self-sustaining, you can process on site. So where are you with those conversations?
Well, we've started exporting to Estonia the rare earth carbonate, uranium, thorium-free, cracked and leached material to Estonia. So that started. I was down at the mill a few weeks ago with Neo and Konstantin Karyanopoulos, just to basically recognize the accomplishment of bringing back rare earth processing capabilities into the United States. So we're still very excited about that. I mean, this is one that I think the market still trades us as a pure uranium play, and we think that there's a huge opportunity here. When you look at like Linus and MP, both between 4 to 6 billion US in market cap, we're catching up in leaps and bounds, and the market just, in my opinion, hasn't really figured it out. So the first thing we're doing is two main areas to advance the rare earths is securing more feed. And we're talking to people around the world. People know that we exist and are quite excited about having another opportunity for processing of the monazite sands that we're focused on in the United States. And we're still very aggressively advancing our plans to do separation of separated oxides at the White Mesa mill. And when we have those two dots connected for investors, I believe we're going to become a multi-billion-dollar company very quickly. We still have work to do. It's not guaranteed, but that is the direction we're taking the company on the rare earth side, while we're maintaining our uranium assets, readying them for going back into production when the price of uranium gets back to a level that justifies doing that.
Right. Okay. So the end game here is to be able to separate on site too. Obviously, process separation, fantastic. I mean, just actually before I move on to the question is, how many separation sites are there in the world? Obviously, you're working with Neo in Estonia, but what are the other options out there outside of China?
You've got separations being done by Linus in Malaysia, and then you have. In China, I'm not sure how many sites there are actually in China, and I think in Thailand there's some sites, but it's quite limited. When you look at in terms of total separation capability, I think it's probably in the order of 80% in China alone for doing the separation. So our goal is to as I said before, we want to be a material supplier of rare earth products. Processed in the United States of America. And, we think that is just an exciting place to be. And, we're going to be patient. We're not trying to win the race in a month or even 6 months, but we are planning to be a major contributor in those areas for rare earth products in the next probably 2 to 3 years. It's probably closer to 3 years, but that is rocket speed in the rare earth business.
But you've effectively been going through a pilot plant. I know White Mesa is not a pilot plant, but it's huge. But you've effectively going through an optimization process, learning about how to process monazite. I mean, what have you been learning?
Well, I've said we started off at lab scale, then we went to like 1 ton scale. We're currently at 100-ton scale. I think this first batch we ran was around nearly 400 tons. So, that's not, really pilot plant scale. But now we're readying ourselves to move up to 1,000-ton scale for rare earth carbonate. And there is really no limitation on the amount of rare earth carbonate that we can produce at White Mesa. I mean, the plant is licensed to produce around 700,000 tons a year, which would, we won't do that. But, we're talking about, 20, 30, 40,000 tons in time. That's our goal of a monazite feed. And but then the other thing is that you only need so much rare earth carbonate. We need the ability to separate the rare earth carbonate at White Mesa, and in conjunction being able to separate at facilities like NEO's Silmet facility in Estonia. So there's still a lot of work to do, because you got to be able to handle the product that you actually process in a sustainable way. So, but yeah, we are scaling it up. We're getting all kinds of information on recoveries, reagent consumptions, quality. It is a very unusual opportunity in itself, the way we're able to scale up White Mesa here.
Okay, so, but are you starting to understand the economics, or how the economics could work for you? Because, as you say, doing a rare earth carbonate, it takes you to a certain point, but the separation is where the money is for you guys potentially. So, and that we've talked in the past, that's 250 million bucks. So how do you get to a point where you can start to put firm up on those economics to be able to make decisions about, raising capital to be able to put the separation in place, and give you an idea about timing?
Yeah. Well, we're doing a initial scoping study with Caristers in France to get a better handle on what they think that the capital cost would be for doing separations at White Mesa. And so we really want to complete that and evaluate, what their opinions are there, to figure out how to best go forward on the separation front. But as I said, we definitely need more monazite feed. I mean, we probably need somewhere in the order of 5,000 to 10,000 tons of monazite to actually start constructing a separation plant, just to get the economics of scale. So, we've got a bit of ways to go, but, with the people we're talking to, that is definitely in I believe, line of sight in the next year or so of securing that kind of feed. But in the meantime, we're going to be going forward with our plans to design a separation plant, do whatever additional permitting might be required, and there may not be a lot required. So there's a lot of moving parts here.
Yeah, there is, and I can understand the tension there. But monazite, the accessibility of monazite is not the issue for you, is it? I mean, how does that market work? I mean, why does it take a year within the next year? Why isn't it pick up the phone and just order it? How's it work?
Yeah, well, a lot of the monazite that is being processed into rare earths right now is being processed by the Chinese. There is monazite around the world in different shapes and forms and different qualities that may need some further beneficiation. So we're just really kind of touching the tip of the iceberg of people that have monazite, and they'd like to monetize it in different ways. So we're looking at all options to supply monazite to the mill. There's no shortage of monazite out there, but there is sort of certain things that have to be done to secure it and get it on a boat heading to the United States, or in the case of Chemours, ramping up their production capabilities, or even Hyperion in Tennessee, getting their project permitted. So we're going to have to end up ultimately, just like the Chinese, having multiple suppliers. It could be 5, 6, 7, 8 different suppliers providing monazite from different projects around the world.
So is there ever a scenario that you can imagine where the Chinese just outbid you for monazite?
Yeah, I mean, that's a possibility. I think that the microscope is on the Chinese. When you look at, the monazite out there in the world, there's really for CNNC, China and us. So if they were to outbid us, in a sort of a controlling way, I think it'd be very, very apparent to the U.S. government, the Australian government, the Canadian government, and the European Union. So, there would be some checks and balances, I believe, and I think it'd be very obvious. So, it's something we have to, consider. But we're not trying to hurt the Chinese. We're not trying to put the Chinese out of business. The world is going to need all the rare earths the world can produce. So, our plan is just to be world competitive.
So do you think governments will step in if that was the case? Because we talk every week about critical minerals and mineral security and rare earths is top of the list there in a lot of governments' eyes. So do you think that they will step in, and do you think they'll be quick to step in? And what does that look like? Does it look like a bifurcated market? Do they put trade barriers in place? Do they give you tax credits? I mean, what are you imagining?
Look, we're imagining we're going to run our business on our own capabilities. We're not planning on government support of any kind. We might get some government support, but we base in our financial models and our strategy on what we can do ourselves right now and looking out the next year or two. So, number of rare earth wannabes are saying, well, they're going to get government support and they'll get a premium and they'll get offtake. And we don't have that in any of our models.
Okay. So you're producing rare earth carbonate. You're doing scoping study on the separation plant. You think that you can get monazite contracts secured in the next 12 months or so. So how quickly do you think that you can become a self-contained unit doing processing and separating of rare earths in the US? Is it 5 years?
Well, again, it'll happen in steps, but I think 2 to 3 years, probably close to 3 years for full integration and separating lights and heavies at White Mesa. So that's just an estimate. We've got to get more details, but it will be quicker, faster, and lower cost than anybody else.
Well, there's the thing. There's the thing that's always intrigued me here, because to build these, typically, we're talking hundreds of millions of dollars at the top end of that. Why is it cheaper for you guys?
Well, we've got an existing facility that's 100% paid for. It's already doing the crack and leach. We think we can scale up the crack and leach with limited capital investment. The big lift is really on the separation plant, but again, it's on an existing site operating in the state of Utah with very good skill sets for running solvent extraction, very good structures on cost of living and on power, central to the United States. There's a lot of factors here, and this is a real important part here. We want the uranium. We can monetize uranium, and potentially in time, we might also be able to get some value out of the thorium. So, we offer something that, based on where we are located, the facilities we have, our desire to have as much uranium as this monazite has, and being able to potentially get some benefit out of the thorium, it's an exceptional opportunity.
Yeah, Mark.
But we still have work to do. Matt.
Always.
It's not over until it's over. But there's a lot of pieces of this puzzle. But it is work in progress. And I think when the market finally understands it and sees the progress, as we continue to make rapid progress as we have in the last 15 months or so, I think the market will figure us out.
It's kind of just coming full circle on the conversation. Are you guys getting approached by any of the uranium buyers in terms of the utilities? Are they coming and talking to you, or is it still very much hands off? Are you hearing anything?
We do get some requests for proposals every couple weeks or something. We always bid it with pricing that we need for the proper return on our producing newly mined uranium, and we continue to not get those awards because the utilities are still looking for what's available from other sources at prices that are in the orders of what you see published prices. So so I think there's certainly an increased awareness. I think this focus on reducing carbon emissions has been very positive for the utilities. I'm excited that they're seeing potential support maybe from the government or their local communities to keep these reactors going and the small reactors. But right now, low prices seem to win every day when it comes to where people are going to purchase uranium. It's always going to be the lower price structures that are currently below the cost of replacement.
This buying that's been, I know we talked about it a little bit last time when we spoke, but all this buying that's been going on by companies, and obviously, Sprot's doing its thing with, obviously with now the UPC under its control. Has it made a damn bit of difference to utility buyers? Because, Sprot's, what is it, 18.2 million pounds of U3O8 and about 300,000 of UF6. It's in the context of 200 million pounds worth of uranium used each year. It's not a lot. So these are just small movements. Is it more about sentiment, or is it going to take something much, much bigger? Do we need continued supply destruction from COVID?
Yeah, look, as I said, I think it makes sense for a number of people that have bought uranium, and as I said, the replacement value is substantially higher than what people are buying it. So, I think it is a good investment when you look at, what a limited return people are going to get if they've got money in the banks drawing interest. It's probably better to have physical uranium. It hasn't moved the needle any material way when it comes to the overall pricing, spot or term. But it certainly isn't hurting things. I think it still puts us in a better position in the future. But you've heard me say this before, speculative buying also results in speculative selling. People will sell this product at some stage, and some that might buy it at $30, and if it gets to 40, 45, they may decide they're going to sell it. So, we just kind of watch the space, but as long as there's growth in nuclear power and there's new reactors being constructed, and some of these reactors that are kind of on the fence whether they stay open or not, if they get support and stay open, that all bodes well for the future.
Have you noticed that the Australian uranium equities have taken a bit of a kick to the teeth in the past 3 weeks? I mean, more so than the North Americans. Is that just a dint of size of the company, size of the market, or is again, there's our narrative going on that North America is better, safer investment?
I don't know, Matt. The equity markets kind of move as the equity markets move. So, the Australian uranium companies, I think, got a sort of a greater lift in the last 3-4 months than a lot of the North American equities. So, look, I don't know why and how and exactly how it works, but they seem to got hit recently, but I think they got quite a boost earlier in the year, maybe a little bit ahead of others in North America.
Okay, well, look, Mark, as you say, the markets move in mysterious ways. Thanks very much for helping us understand a little bit better about why you did that that deal with ICU, and obviously the update on what's happening with NEO. Stay in touch. Let us know how you get on with your plans for the rest of this year.
Thank you, Matt. It's going to be an exciting year, and we've got a lot going on.